Hello and welcome to Halftime Report. I'm Nigel D'Souza, and joining me in just a bit will be Sumaira Abdi. Well, the markets are doing well. We're up close to around 100 points odd. The real party, though, is going on in the mid-cap and the small-cap indices, up between 3 to around 5% approximately. The Nifty Bank, well, that's a relative underperformer trade today. That's up only around 0.5%. But the IT index and the auto stocks more than making up for what the Nifty Bank is not doing in today's trading session. Well, we have some economic data that's flashing for you on the screen, so let's take that up first. The WPI number should actually come up for you on the screen. I think I saw a reading of around 0.16% approximately, minus 0.16%. That compares with the negative 0.58% on a month-on-month basis. And we have the breakdown as well. That's plus 0.16 is the number that's come in there. That compares with the negative 0.58% on a month-on-month basis, Sumaira.
All right, so I think we can hand it over to Lata to quickly tell us what this WPI number means, Lata.
Well, it's clearly an increase in inflation. WPI was running negative and now it's running positive. So in a way, that's positive. Actually, the best number over here in WPI, you should actually look for the manufactured index because that is not well represented in CPI. And that has come in a little better. Nigel should be personally happy. Manufactured products, since you chase a lot of steel and cement, most of the manufactured products are your kitty, your baby. So that's come in at 1.27, which is a very big blessing compared to the 0.51 that was in the month of July. So prices have been able to be raised a bit. Fuel and power inflation are minus 6.8 versus minus 8.4. No prizes for guessing that. After all, a lot of fuel prices, there's been a lot of global fuel price fall. And even if all of that is not reflected, certain derivatives would fall a bit. So we have seen minus 6.8 on fuel. I'm still waiting for the food articles inflation. That's come in at 3.84% compared to 4.08. Now, this is good, because it was food inflation that is rising. Now, I just have to point out a big discrepancy in the CPI food and the WPI food. Wholesale food prices are not very high. You know, procurement prices, MSP prices, all those have not risen much. That has been, even last month, it was 4.08. But any guesses, you know how much the CPI was for food? It was 9%. So, you know, by the time it comes to the mandis, to the local market, there are, you know, transport problems, logistic problems, shops closed down. And so prices have gone through the roof. But CPI is the more important number. That's what the Monetary Policy Committee and the Reserve Bank have to look at while setting interest rates. So here the positive for me is that food article inflation has fallen by 16 basis points. The July number was 4.08. Oh, it's more than 16. It's almost 20 basis points. Whereas the August WPI food, wholesale food price is 3.84. 4.08, 3.84. A fall of over 20 basis points. That's, you know, something you can take with both hands. That's extremely important. And then, of course, as I told you, the other positive that's come from the number is manufactured products inflation is slightly higher. Now, you want food prices to fall and you want manufactured to rise because there is a severe deflation stalking the manufactured segment. That's my initial, view after looking at the numbers. But let me turn it over to Madan Sabnavis of CARE Ratings, the chief economist at CARE Ratings. Madan, good morning. Thank you very much. One reason to invite you is you're the only person who gave us a poll for the WPI numbers. You know, most people give us a polled number only for CPI. How does this square with your expectation?
In fact, we had a slightly higher number of 0.4%. So we were definitely expecting a positive number. And I think the manufactured goods going up has been the main cause of it because that has the higher weight in WPI. And that's, as you have mentioned rightly, WPI only gives, that's the only index which gives us an idea of what's happening in the manufacturing sector. And I would tend to think that the increase which we're seeing in the prices of manufactured products is more because of the supply disruptions rather than the excess demand forces. So it's more a supply side effect coming on both agriculture as well as non-agriculture. And that's what we get to see out here.
You don't think that the rise in imported metal prices have got something to do with the higher manufactured product prices?
To a certain extent, yes, but I think the dominant factor would still be the supply disruptions which have been there in the economy. And I think that's the reason why prices are moving up. Just like I would say that even in terms of what because it's likely what you were talking of, the CPI inflation numbers tending to be higher, is again on account of the disruptions where the margins tend to keep increasing. By the time it reaches the consumer, you tend to be paying higher prices, and that's why the CPI food inflation always tends to be higher than the WPI food inflation. So here too, I think it's more on the supply side distortions which are causing it. I wouldn't say it's being too much on account of international prices and imported inflation pushing up the prices of manufactured.
Okay, just a final question to you, Madan, since I guess we will ask you the more important questions today evening at 5:30 when the CPI numbers come. Nevertheless, after looking at the WPI numbers, I know you've just had one glance at them. Would you want to change any of your CPI numbers? You were at 7%, I remember.
You know, remain in the same region, maybe give or take another half percent in the downward direction. 6.5 to 7 is what we would be looking at still. Again, being driven by all the components, I think just food component as well as the miscellaneous component. Because I think there we have seen a lot of adjustments being made by the industries. As the unlock happens, you tend to be increasing the prices. We've seen it happening in aviation. We are seeing it happening in terms of healthcare, education. So I think the pressure will remain in the upper direction.
Oh, you expect prices to rise in CPI as well?
Yeah, they would remain in this region of 6.5 to 7%.
Okay, and core CPI perhaps would be a spot of bother?
Yeah, it would be a bother and something which would be a concern for the MPC also, because while the head inflation is what they target, I think the core inflation number is also what they would be looking at. And I think that gets influenced by these components which we are talking.
Okay, well, we will leave it at that and continue this conversation at 5:30 today when the CPI numbers come. Sumaira, there isn't much that I can add in terms of the WPI. The overall numbers positive in the sense that we have gone from a deflation to an at least a slight rise in prices. You know, nobody will produce if your prices are going to fall by the time you buy the raw material and put the finished product into the market. So minus numbers in inflation are terrible for the economy. It's deflation. Now, at least we have come in the WPI to plus 0.16, and in manufactured it is 1.27, which is always good because that's where there is even more investment that the producer puts on the ground. And food inflation has fortunately ticked a little lower because it was going through the roof. And the Reserve Bank and the Monetary Policy Committee had made it very clear that their next move in terms of cutting will be only when this peaks off. Right. So this is a bit of positive on both manufactured and food inflation. These are good numbers, but these are not the policy making numbers. The input to policy making will come today at 5:30.
All right, Lata, thanks very much for that. In fact, the market also doing well, pretty close to the high. So 350 points added on the Sensex. Now the mid-cap index is up 500 odd points. That's about a 3% up move on the mid-cap index. Meanwhile, S&P cutting India's FY21 GDP growth forecast to minus 9% now from minus 5%. Lata, would that be significant?
It is significant, but it is not new. On the day the GDP was announced for the first quarter, which came in at minus 24, way above the poll, which was at around 18 to 20%. Almost all brokerages had cut their estimates to close to minus 10%. Last week, that is actually on Friday, Moody's had cut the forecast. Their original number was minus 4. They brought it down to minus 11.5. Compared to that, you can say S&P has been a little more benign at minus 9%. Regardless, there's not much to choose between minus 9 and minus 11. It is a bad number. We will have to wait and see whether they expect a V-shaped recovery the year after. For Moody's, even the year after was only 10. So, you contract 11.5 and on that contraction grow only
even
10%.
Even for S&P, it's 10%.
Oh, there you are.
22.
So, you're more or less going to be at FY20 GDP. After 2 years, at the end of 2 years, you're going to be what you were at FY20 GDP. Now, guess what this does to our pay scales? I mean, there is no growth. So somewhere, some people are going to lose jobs and salaries. Or for 2 years, you're going to see stagnation. But still, we will take it with both hands that at least both the agencies see a growth in FY22. This is not pleasant numbers, but it's not new.
All right, thanks very much. Let's just focus now to some earnings. IRCTC posted a weak set in Q1. Of course, as rail travel was hit by the COVID-19 outbreak. Mahendra Pratap Mall, the Managing Director and CEO at IRCTC, joins in. Sir, good afternoon, Mr. Pratap. Thanks very much for joining in. First up, can you tell us what has been the level of bookings and passenger traffic now?
Yeah, compared to Q1, booking has improved. In fact, till the introduction of these 40 new trains, our booking till end of August was averaging around 2 lakh tickets per day. Now, when this new trains were introduced on, I think, 10th, booking had started. So on one particular day, booking has shot up to almost 5 lakh tickets. But it was primarily because it was advance reservation for next 120 days. So now we are hoping that this will stabilize at around 3 lakh tickets per day.
All right, so, there were some reports of these neat trains going empty. What is the average occupancy now versus the past quarter? And how do you see them trending going ahead?
Occupancy, frankly speaking, I am not aware completely, but yes, there are trains which are originating from Bengal, Bihar and Eastern UP and moving towards Delhi, Bombay, Gujarat and Bangalore. There is a huge demand. In fact, there is waiting list, especially, last week we saw there was a huge demand from Orissa to Gujarat. But return direction, yes, occupancy is much low. Of course, that analysis we have not done. So I cannot comment on that.
Okay, how are things on NEER and the catering business front?
Catering, if you see first quarter, there was a business because of this Shramik special trains. So, and in second quarter also, we have imposed a lot of restriction on catering that it will be served, only ready-to-eat meals will be served. So, of course, demand is much less compared to earlier pre-COVID time. Really demand, it's gradually picking up. People are having more faith on packaged drinking water.
Mr. Mal, if you could quantify the cost reduction in FY21.
We have a fixed expenditure of almost 300 crores per year, which includes staff, administrative and all other expenses. So for current year, we plan to bring it down by almost 20-25%.
Okay, so is there any update on your hotels business?
The hotels, our Lucknow hotel is progressing, construction is on. We have procured a land and floated tender for Kevadia Hotel, Kevadia and Khajuraho both. And we are in touch with the state government for 2-3 more sites. If allotted to us, we will go ahead with this hotel.
All right, final question then from my end. Any capex plans going ahead for hotels?
We purchase land from state government as and when it is made available. And then like Lucknow hotel we are investing about 20 crores on structure. See, what we do, we purchase land and we estimate what will be the construction of cost of shell. So we finance by that extent, then PPP partner, and it is built by PPP partner who is given to operate this hotel for 30-35 years. And he puts in his money by way of soft furnishing. So he gives us a fixed return on our investment plus a revenue share, which is bit variable. And then after 30 years, 35 years, the property will come back to us.
Okay, any capex plans going ahead for hotels?
No, nothing in pipeline so far.
Have there been any revision or any revisions planned in service charges?
I think we have a bit of an audio issue out there, but I think we got the sum and substance in terms of, what the management of IRCTC had to tell us. Well, we have another management actually waiting for us, but let's slip into a short break. You come back, we'll get chatting with the management of Midani. Remember, first quarter